As the scare of COVID seems to have gripped the markets, let's talk a little bit about the momentum as well, as we are seeing some concerns on the vaccine and the COVID surge keeping FPIs at bay, and the retail intraday cash and F&O leverage as well has been limited from March. To understand that better, we've got Nikhil Kamath, co-founder and CIO at Zerodha, joining in. Nikhil, thank you so much. Good morning. Let's just talk a little bit about what exactly this nervousness in the market is spelling out by way of the intraday cash and positions that we've seen, given the mighty sell-off we witnessed yesterday.
Hi, good morning. Yeah, I think there has been, quite a bit of froth in the market, considering the manner in which we have rallied ever since the pandemic last year. So with COVID coming back into the fray, maybe we are seeing the second wave a bit later than elsewhere in the world. And it seems to be significantly paring down expectations in the market. I think nobody knows the scope of what will happen with COVID in the coming days, but the amount of worry in the market has significantly gone up for sure.
So in terms of as well what we've seen with respect to what we've seen with respect to retail participation, have we seen a lot of retail margin calls as well kicking in? How much nervousness have you seen on that front?
No margin calls as such. Bear in mind that we have rallied significantly, and the correction as a portion of that rally is not substantial at all. So no such thing as margin call. Also, the regulator has done a good job with reducing leverage inherently in the market. So no structural issue as such, but the fact that we have more people investing directly versus having come in through a fund manager or a fund house, as one might have expected traditionally, I think people, when there is a 5% correction or a 10% correction, react a lot faster than a fund manager would. A fund manager might have the patience and the wherewithal to, in a manner, hold on to a loss-making position if he believes in it fundamentally. But retail is a bit more sentimental. So I think that could also change the dynamics of the market. So a 10% fall in the market could very easily trigger the next 5 or 10% correction.
So typically when we've seen these kind of, sort of sell-offs play out, you're talking about this kind of a major gash and how retail investors react faster. What has usually been the trend that we've seen from the retail investors? Say we do see another couple of days of consolidation or sell-off kicking in?
Retail seems to be buying more. They're buying into the correction. I think they're seeing value in the correction. Personally, I think the markets are maybe a little bit overvalued considering the multiples we are at, and if you were to consider historically the average at which most of these large cap and mid cap companies trade at. But retail is buying, and I think they're using the dips as an opportunity to add allocation.
Nikhil, many thanks for joining in and just giving us a perspective as to what the reaction has been from retail investors to the mighty fall that we witnessed in trade yesterday.